Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day, regardless of how ridiculous we might have seen the price action from yesterday. Nice 8% correction in 9 hours. That's quite significant. We're going to talk about that and of course a whole lot more, and help us understand if we are in dire straits like some people might think, or if we might actually still be okay. There's a lot of different schools of thought there. We're going to try to entertain them all. Once again, thank you for joining me here. If you're new to the channel, not a financial advisor, hope you can learn something here today. If you are not currently a community member, we have over 300 members. CryptoCache.tech is linked in the description below if you want to become a better trader, where I teach you how to trade and of course provide you with signals as well for every single trade that I take. And right now we have quite a few trades that are open with very large stop losses. So just kind of preface that if you're going to have any type of position you're going to take right now, make sure you either have a very large stop loss or just don't leverage, one of the two. Obviously, it depends on what your overall situation is, your portfolio, etc. But generally speaking, larger stop losses is probably the way to go right now with these violent swings in either direction. Okay, so just keep that in mind. That being said, let's go ahead and take a look at some of the obvious stuff here. So we're under the 50-day set moving average. We know that. Price got rejected pretty hard from that. That's right around 42,200. Let's go ahead and pull up the Fibonacci's here, one second. And then what we also want to look at too is, of course, RSI. When we talked yesterday, RSI was peaking over 50. And I said, hey, candlestick hasn't closed yet. Let's not get too excited. But if we get a close above that, it'd be fantastic. That would have been essentially a close above 42,000, that key level resistance at the 50-day SMA. Obviously, the price got rejected quite hard from that and pushed way too hard, way too fast, and sold off quite dramatically. Now, that being said, we're still under a key level resistance, so we're not out of the woods yet. Even if we would have been above that or closed above, we probably wouldn't have still been totally in good shape, but we would have been in much better shape than we are today. So I'm not going to sugarcoat it at all. It doesn't look fantastic for the moment, but we still don't have any specific indications that we're going to break the trend line and continue lower. We have a lot of resistance, at least more so support resistance, if you will, to the downside, right around 39,900 / 39,000 from before. So let's just go ahead and touch on a couple of things here before we move on. So something I want to kind of point out here, just a little pattern that I noticed here from before. In this trend that we've had, there's always been a sell-off before a massive recovery. So we got this increase here, right? Sell-off. And then a very strong recovery. We got this increase here, sell-off, very strong recovery. Same thing could even be said right here. Sell-off, recovery, sell-off, and increase. So generally speaking, with us coming down like this, up and down again, the likelihood of it coming back up is also quite high considering its history. Now again, you could argue that that's a stretch, which I would agree. I wouldn't say you want to put a bunch of faith into the fact that, hey, it's done this before, it'll do it again. But it has a tendency of doing this crazy, stupid sell-off just before it ramps up and takes off, which is what we were expecting recently. But once again, we get a second dead cat, or you could say a bull trap, however you want to word it. We got one of those, and now that we're here and we're bouncing off this key level support, we should expect the price to continue to progress upwards or sideways from here. Now, we want to also be open to the idea of the fact that the price could come down and break this trend line, because obviously we're testing it quite a few times, and it does look like the price wants to come down below. That being said, the price were to retrace, we've got a key level support based on Fibonacci so far at 38,600, and then of course we want to ensure that we don't come below right around 37,500 as a very round number, because that was essentially the most recent low. Okay, so we're still making higher lows, and as long as this next low isn't lower than this guy here, we should be in pretty good shape. Okay, so I'm only going to be concerned, or we'll need to reevaluate everything when we hit 37.5 or lower. That would be a case in point where I'd be concerned. For right now, yes, it's true. We're trending too close to this trend line. It's not very comfortable. We may even lose that. And you have to understand we're okay in the grand scheme of things. And the reason why I feel that way, once again, there's a handful of other reasons. We can look at larger time frames too. But generally speaking, we look at the volume for 2022. We have the strongest amount of volume right above and right below here. Basically right at about 39,000 if you were to kind of zoom out a little bit and go back a little ways. But generally speaking, yeah, 39,000 and of course right around 42. So we're kind of stuck in that little wedge right now. We've got a strong resistance at 42 and a strong support at 39. So the likelihood of a channel trade between 39 and 42, or at least a range trade, is very high. In other words, the price should range in between those levels for a little while until the 50-day SMA works its way back down. Once again, different schools of thought, a lot of different thought processes there depending on which side of the scale you look. But I like to look at both sides and try not to attach myself to one or the other. Truth is, price could come down, but it's also likely to come back up considering how much volume support we have. All right, so good. Handful of different things to look at, but just kind of throwing it out there as well. And we can even entertain some large big picture stuff too. A lot of folks are attaching themselves to the fact that we have a 1 month MACD divergence. I don't personally subscribe to that just based on the simple fact that we've got a lot more market adoption right now. We saw how strong 30,000/40,000 can be as a support level. And I think the likelihood of this trend, this momentous trend, pushing to the downside very hard is pretty low. If we see 30,000 again, that's a possibility. We got to be open to that. But I don't think it's very likely. As long as we maintain over 50 on the RSI here, we're probably going to be in good shape. Because again, the MACD tells us an overall momentum shift. Obviously, there was a momentum shift when we got rejected at 69,000. That's pretty obvious. So just keep in mind, I don't think that's like the best indicator. Yes, it's definitely an indicator that you can use and be successful with. But it's not, I wouldn't say it's the bee's knees when it comes to the best case scenario for an indicator. There's a lot of other factors too. Looking at the weekly here, just touching on this too, we can kind of see here, we got a MACD divergence here, of course, as well. Very synonymous with the behavior here recently. And that we are tentatively stuck under 50 on the RSI. That to me is more problematic than a MACD divergence on a monthly. But once again, this isn't foolproof because when it comes to the RSI, I do feel that the 1 day time frame works the most effective for telling us where we're at. And obviously we got a rejection here. So again, not dire straits, but not great either. Okay. Again, stuck between 39 and 42. That's essentially where we're at right now. So again, just some things to think about, kind of just looking at abstractly for you. Last thing we want to kind of wrap up here is a 4 hour. We can see on the 4 hour, we got rejected as well recently off the 50-day SMA. Now that's not like a full-on 100% guarantee that the price is going to continue to go down because of that, but that does not bode very well. We want to be back up over the 50 at least to have some kind of consolation. And we can see here on the 4 hour as well, we have a fall from grace. We got this, no less than 16 hours ago, we were testing 43,000. And then it got rejected off of 70 on the RSI. Price comes way down and continues to progress lower. So we could very well see 39,000 again. I wouldn't put it past Bitcoin, of course, because the greed is real, and these guys are taking their profits and they're adding to their position as the price comes down lower. Just this constant rinse and repeat, making billions of dollars while the rest of us really just enjoy the wayside. Either way you look at it, all sarcasm aside, it's not great in this sense here. We definitely have a type of divergence here. And we can also see that reflect on the MACD as well. We're starting to pick up momentum to the downside. Okay. Now, when it comes to the 4 hour MACD, that's the one that I kind of prefer to use the most. And this is very telling in the sense that we should expect to continue to see lower lows and lower highs for the immediate future. But once again, we're going to probably and potentially, I would just say more so potentially see 39,000 tested again. And if so, we'll find out very soon if that's going to be a key level support or not. But I mean, if we look at the volume for the last, this is about roughly 1 month's worth of trading data. I mean, the most amount of volume is right at the current price point. So the overall sentiment for the last month has been that 39,000 is a good value. So there's that as well. Okay, let's go ahead and take a look at the 1 hour and see some obvious stuff here. We lost the cloud pretty substantially, not even close to holding that. The price action is obviously below. If you have a short position open, you basically want to keep it open considering how free and clear the lagging span is from the price action, and generally speaking how dramatically lower the conversion line is from the baseline. You don't see this too often, but with this significant sell-off, a very strong 8% in 9 hours, you can see that kind of thing happens. Take a look here as well. if you see the, what is it? The TD sequential. So there's this, went up to an 8, and then all the way down to a 9 to consolidate, and then we're right back on the downtrend. So as I've mentioned before, the first 9 on an 8 on a 1 hour continuation isn't super super reliable. In other words, you don't want to just buy right off that 9. Hypothetically, yes, you could have, considering the fact that it did increase a little bit, but generally speaking, you want to wait to see a second 9, and then that's the case in point where you should experience a reversal. Because it's obvious the bears are trying to sell all their profits that they have from Monday. Because you look at Monday, price increased, hit up to a 9, up to an 8, and then up to a 6, and continue just going higher and higher. A very healthy continuation pattern, which is interesting as to why we see such a strong sell-off here, because with that kind of health, it shouldn't decrease in price or value. That's when manipulation has taken place, and that's absolutely what's happening. But what's going on here, and this is kind of a Monday through Friday typical thing, you'll see Mondays are either red days and Fridays are green days, or the inverse applies. So here, we had a very strong Monday, green, and what do you know? All the profits in this time frame, these 4 days, is taking in the last 24 hours. And the weekend will come and go, and we'll rinse and repeat the same stuff over and over again. It's essentially a big game, and it's unfortunately that we kind of get caught in the wayside. But generally speaking, it makes perfect sense when you look at it this way. You know, the whole Monday through Friday, rinse and repeat. Anyways, just something again to kind of think about and consider here. It's no guarantees that always happens, but it's more consistent than not. And I wouldn't be surprised if we just see kind of a sideways weekend with low volume again, considering there's a lot of fear, uncertainty, and doubt. And then, of course, a strong potential increase on Monday. But we got to get there first, and we don't know where we're at just yet. So honestly, this could go either way for the moment, but it does seem like we're range bound tentatively between 39 and 42. That's what it kind of feels like here, just once again, based on the tremendous amount of volume that we have seen here so far for this year. Okay, so again, a lot of volume at 42, and a lot of volume at 39. So we're just going to probably be stuck here in this range for a little while. And what that would mean, though, if we were to go that far and it were to continue to range and break this trend, is that we'd essentially break that trend line. Again, it's not terrible. The sky isn't falling because we break that trend line. If we have and we start creating lower lows, then that's a different story, okay? But heaven forbid the price continues sideways here and goes up, or goes sideways and then comes down. As long as we're not making lower lows, that's the important thing I think we need to kind of acknowledge here. So to me, I think we're kind of right. We're fair to Midland right now. We're kind of right in the center. It could go either way. It's not fantastic. It's not abysmal. But honestly, I mean, there's no way to sugarcoat it. It doesn't look fantastic for the moment. All right, so just kind of let you know, shoot you straight. That's generally what I'm thinking here. So, again, speculating this weekend, I would say some sideways action, potentially even further retracement to 39, testing that key level support area, and then potentially an increase from there to possibly repeat that similar Monday behavior, right? So again, a lot of different potential options here. We'll see what happens, and all we can do is be patient. The one advice I do have for you, though, before I let you go, is to continue to dollar cost average. I was actually very happy in a small way, not happy in the sense of my other signals, being pretty much stunted out. Like all the growth that we saw over the last 2 or 3 days is completely wiped out. Minus that, I am very happy that we have a better value here for Bitcoin. So continue to add to your position, dollar cost average whenever possible, because anything under 40,000 should be an attractive value. I think 40,000 in the big picture will eventually be a very, very enticing number that we'll probably never see again. Just some friendly advice there. Dollar cost average wherever possible. And I hope that you found benefit here today. Thanks again so much for joining me here. We'll look forward to seeing you in the next video. Have yourself a great rest of your day. We'll see you soon.